For decades, the rules of early-stage investing have been rigid. If you back a startup, your capital is locked away. Founders and early stakeholders typically find themselves holding equity that is highly valuable on paper, but completely illiquid for 10 years or more. Without an initial public offering to open the doors to the broader market, establishing a true, verifiable price for those shares is nearly impossible. But a late-stage private company called METAXCHANGE.AI is actively breaking that rule of illiquidity. Look at this financial data dashboard. It outlines a target asset, METAXCHANGE.AI, carrying a significant market capitalization of $343 million. That valuation is supported by a verified $33 million in annual sales, establishing a solid revenue foundation. Yet, despite generating numbers that rival many publicly traded firms, METAXCHANGE.AI remains strictly a pre-IPO entity. This is where the data presents an anomaly. The stock maintains an active, continuous secondary trading range of $12 to $14 per share. Maintaining a tight trading range like this is highly unusual for a private asset. It demonstrates a level of efficient price discovery that you usually only see on the public NASDAQ. This efficiency isn't a glitch in the market. It is the direct result of a specialized secondary market infrastructure engineered to bridge the divide between private equity and public liquidity. By breaking down the mechanics behind this $12 to $14 range, we can observe a structural shift in how high-growth companies achieve scalable capital formation long before they file for a full IPO. Engineered liquidity only functions if there is actual underlying value driving institutional demand in the first place. In the case of METAXCHANGE.AI, that value is built on two core pillars. The first is its proprietary AI-powered digital media hub technology. The second pillar is its advanced enterprise resource planning, or ERP, infrastructure. Together, these systems form a scalable digital ecosystem designed for supply chain optimization and data-driven enterprise solutions. This technology is currently deployed on a global scale, with active operations expanding across North America and the Asia-Pacific region. Operationally, the firm is structured as a Florida-based C corporation, using that foundation to execute a series of strategic acquisitions. High revenue, advanced technology, and a global footprint create a precise profile that institutional capital actively targets. While METAXCHANGE provides the necessary high-growth pressure to attract capital, that pressure requires a specialized valve to safely release shares to the secondary market. That valve is the MAXWELL RAND PIPE platform. PIPE stands for Private Investment in Public Equity. However, MAXWELL RAND has adapted this syndication structure specifically to handle secondary market transactions for pre-IPO companies. This illustrates the first step of the syndication process. The MR PIPE platform aggregates shares from early stakeholders looking to unlock secondary liquidity. MAXWELL RAND then takes these disorganized origin points and packages the shares into a single, clean Series A investment vehicle. This newly structured vehicle is not listed on retail brokerage apps. Participation is strictly limited to accredited investors, ensuring complete adherence to federal regulatory standards. Historically, buying into late-stage private equity at this volume was a privilege reserved entirely for massive venture capital and private equity firms. The MR PIPE platform reorganizes this dynamic, giving qualified individual investors direct access to institutional-grade opportunities. The syndicator organizes the chaos of private equity. But structuring the deal is only half the process. Those shares must be transacted in a secure environment. The historical danger of trading private shares is that it often happens in unregulated secondary networks, inviting opaque pricing and legal jeopardy. This diagram shows the execution layer that eliminates those risks. Every MR PIPE transaction is routed exclusively through the NASDAQ private market, or NPM, infrastructure. The NPM terminal operates as a strict regulatory checkpoint, forcing private transactions to meet public market standards of trust. The first mandatory filter is Know Your Customer verification, legally establishing the identity of every participating accredited investor. Next, the transaction must clear strict anti-money laundering compliance protocols. Finally, full transaction oversight is maintained under the NPM compliance infrastructure, from the moment of execution all the way through to final settlement. This rigorous sequence of filtration guarantees a secure and entirely transparent environment for buyers and sellers. By routing the structured syndicate through the NPM terminal, the vulnerability of unregulated trading is completely replaced by institutional-grade security. This reverse flow diagram shows the entire pipeline operating as a cohesive system. At the origin, pre-IPO stakeholders unlock immediate secondary liquidity without an opening bell. At the endpoint, the active $12 to $14 range provides continuous price discovery. This continuous flow ultimately enables highly scalable capital formation for the target company. High-growth enterprises like METAXCHANGE.AI can now mature steadily in the private sector, completely avoiding the immediate regulatory and financial burdens of a public IPO. As Maxwell Rand's leadership notes, their platform is specifically designed to bridge the gap between private market opportunity and institutional-grade access. The structuring of the METAXCHANGE.AI offering provides a clear blueprint, a fully compliant, transparent, and liquid pathway for the modern accredited investor.